Hi, I'm Pete Mitchell with some information on fixed indexed annuities. These conservative investments have become a popular alternative to bonds. So let's take a look at them. Fixed indexed annuities can be very useful investments. As the name implied, FIAs are fixed annuities linked to the performance of a stock market index, often the S&P 500. Because of this stock market exposure, they can sometimes bring conservative investors a very nice return, often considerably better than CDs, bonds, or money market accounts. They really aren't designed to outperform the stock markets. They are designed to outperform the fixed markets. During the accumulation phase of an FIA, you have the opportunity to benefit from the stock market gains while your principal is protected against stock market loss. The annuity contract usually generates you a minimum rate of interest on your purchase payments while the annuity is growing. The insurance company involved will credit you with either the minimum return stated in the contract or return based on the performance of the linked index. If you're skittish about the stock market and investing, you can potentially realize the benefits of stock market participation through this comparatively low-risk investment. Now, each fixed indexed annuity has a particular participation rate. The participation rate signifies the percentage of the invested assets within the annuity key linked to the indexed annuity. So, in other words, let's say you have a fixed index annuity linked to the S&P 500 and the participation rate is 60%. This means that if the S&P 500 finishes positive, you'll receive 60% of that gain. If the S&P 500 gains 10% across a year, this means your annuity gives you a 6% return for the year. That's 60%. Compare that 6% potential return to so many CDs and money market accounts, which generate a pittance of interest. Some fixed indexed annuities measure an index gain on an annual basis, others over the entire term of the contract. Sometimes there are ceilings on just how high a return you can realize, and from time to time, participation rates may be reset by the insurance company. Occasionally, a margin or a spread determines the index-linked interest rate instead of a participation rate. In this case, if your annuity gains 10% and the spread is 2.5, that means your credited gain is 7.5. Most fixed indexed annuities give you all the features of a fixed annuity. Your earnings are not taxed, and when the distribution phases of your annuity starts, you can receive periodic, usually monthly income payments. Sometimes you can take the entire value of your annuity as a lump sum at the end of the contract term. It's your withdrawals of any gains that are taxed. There is often a guaranteed minimum death benefit payable to your beneficiary when you pass away. Another key feature is that there's no annual contribution limit. If you need to put away more for retirement savings, now the contribution limits on IRAs and 401ks can be frustrating. Would you rather have a retirement account you can only put $5,000 or $6,000 in annually, or an account to which you can contribute as much as you want? Fixed indexed annuities and other types of annuities have no contribution ceiling, and there are no IRS imposed income limits above which you cannot contribute. But make no mistake, these are long-term investments. Many of these annuity contracts are 7, 10 years or longer. If you need to withdraw your money from the annuity in the accumulation phase, there is usually a considerable penalty. Fixed indexed annuities do require a long-term outlook and a long-term commitment. Not to mention that the IRS says that if you take a distribution from an annuity prior to age 59 and a half, you face the same 10% federal penalty as you would if you were taking money out of an IRA. Would you like to learn more? If you're planning to maintain or improve your quality of life in retirement, maybe you'd like to see how a fixed index annuity can potentially help you. If that's the case, then give me a call or send me an email, and I'll be happy to look at your situation with you. I'm Pete Mitchell, and I look forward to sharing more on the markets and investing with you at a later time.